uh, okay, let me check the Excel sheet. Hard copy must have been received by you, Sureshji. You haven't received still? Okay, then you'll have to send out an email to s3@onlinetradingacademy.com. Yeah, okay, this is what I wanted to. All right. What I want you to do now is look at the one this rhombus, these rhombuses, and tell me what do you understand by this. Let's see. Okay, so this is moneyness, this is expiry, and here whatever I'm comparing is the different volatility impacts on moneyness and expiry, as well as theta on moneyness and expiry. Is a name option, no, options trader book. Did you get any courier, Surajji? No, then you send out an email to S3 that you, or connect with somebody in Bangalore, Sujay or someone, and tell them that you haven't received the options manual. Yeah, professional options trader is the name of the manual. You guys understood this, these rhombuses? Okay. Now, so you see the distance between these two points, that is the value of Vega. Okay, the distance between the 2 points. I have drawn those arrow lines, right? Those are the distance between the 2 points. Okay, now this is front month, next month, far month. The middle one is going to be in the money, and as you move up, so this is an example for call option. So as you move up, this is going to be out of the money. As you move down, this is going to be in the money. Okay, so if you see, as you go up, is the length of this segment reducing as you go up? And is it again reducing as you go down? That's how Vega is. As you go out of the money, as you go in the money, your value of Vega will keep on reducing. This is proprietary. Proprietary Ajit. Okay. Now, if you see, this is the front month. The same thing. So the same at the money strike. Next month, is this bigger than the current one? Is this segment bigger than the current? So when you change your expiry for the same strike, the impact of volatility changes. That is, Vega is going to increase, is going to be higher. Similarly, you go to the far month. Now you see bigger value of Vega, right? So at the money, at the money, at the money, same strike, but different expiry, different values of Vega. That's why I have written here in this case the volatility impact is plus, only one plus, just a symbolic representation, plus. Okay, which means there is a positive impact of volatility, certain number. But when you go to the next month, the impact is higher. That's why two pluses. And when you go to the far month, the impact is still further higher. Yes, Sony. Having higher value of Vega will always help the option buyer. Similarly, if you see here, even the out of the money strike, this is like, let's say this is out of the money. The front month out of the money option will have lesser Vega compared to the next month out of the money. The same thing will be still higher for far month out of the money. So be it in the money, out of the money, or at the money, the Vega is highest for far month and least for the front month. So do you understand the impact of Vega with respect to expiry? Plus is the power, the strength with, what is the strength? It's just I'm just denoting it with plus. So plus, 1 plus is normal power, 2 plus is greater power, 3 plus is higher power. At the rate is nothing, that's a theta. That's theta. So let me first finish Vega, then I will come to theta. So is the impact of Vega? Yes, of course. When you're buying option, a longer term expiry will always be in your favor. I'll tell you how now, since all the Greeks are done, I will tell you how the rules make sense. So the impact of Vega with respect to moneyness, at the money, in the money, out of the money, and impact of Vega with respect to expiry, front month, next month, far month. Is this clear to you now? If you understand this right, that's it. You have understood Vega completely. So remember, Vega is highest in far months, least in the front month. Vega is highest for at the money and least in as you go out of the money or in the deep in the money. So if I have to look to choose an expiry and a strike price, which expiry and which strike has the highest Vega exposure? See, you guys are really smart. And also, you're smart because I am teaching you. Just kidding. So Abrar, Rameshji, Deepa, is this clear? So is Vega with respect to moneyness and with respect to expiry clear the impact of Vega? Yeah, it is the simplest and delta. I agree with you रमेश जी. और ये समझ में आया ना, डेल्टा को भूल जाओ, कोई फर्क नहीं पड़ता डेल्टा का. डेल्टा को मैं और सिंप्लीफाई करूंगा जैसे वी गो टू इनटू रियल ट्रेडिंग, राइट? रियल प्रैक्टिकल ट्रेडिंग, आई विल सिंप्लीफाई ऑल दिस फर्दर फॉर यू. The only thing is you need to understand these impacts like far out of the money, far at the money, out of the money, all these impacts, you know what they will help you? They will help you understand the strategies faster. That's why I spend more time in trying to explain the concepts, because if you understand this, strategies are like cakewalk. राइटर के लिए भी और बायर के लिए, दोनों के लिए इंपॉर्टेंट है देविया. Now let's go to the theta impact. Okay, now yeah, correct Sony. Now let's go to the theta impact. What do we know about theta? Theta hurts the option buyer and helps the option seller. That is, theta is negative for an options buyer and theta is positive for an option seller. Is this understanding correct? Right? So if you take a look at this, is theta going to be greater for front month or greater for far month? Hey, not far, theta, time decay. Okay, and as we go far month, the theta impact is going to reduce, isn't it? Remember, more the time value, lesser the impact of theta. More the time to expiry, lesser the impact of theta. Lesser the time to expiry, more the impact of theta. Since this is front month and lesser the time to expiry, the theta is going to be higher, and for far month, theta is going to be lower. So the impact of theta starts reducing as you go far month and starts increasing as you come nearer. Whereas Vega is exactly the opposite. Now, another question to you guys. Let's see how smart you are. Yeah. Where is theta the highest? In the money, at the money, out of the money? Anand, Jamdar, Harish, you are wrong. Suresh, you are wrong. No, I'm talking about moneyness. Expiry was clear, right? No Shiba, it's not in the money. No Rajiv, it's not in the money. So the moneyness part, the expiry part is taken care of. Far month has lesser value of theta. Front month has higher value of theta. Why does at the money have higher value of theta compared to in the money and out of the money? Can anybody explain? Tell it to me. Where is theta? Is theta highest at the money, in the money, or out of the money? That is my question. It's at the money. And why is it at the money? Why is theta highest at the money? No, no, Ashish, if you take a look at the far month also, right? The at the money theta for far month will be more than the out of the money theta. Arun, absolutely correct. Because time value is the highest for at the money options. So whichever option has higher time value will also have a higher value of theta. Absolutely correct, Shashank. Divya is right. Arun is right. Anand is right. Shashank is right. Okay. So remember, at the money option will always, because that's where the entire action is, right? It is closest to the current market price. Correct? It is closest to the current market price. So more the time value, higher the value of theta. Lesser the time value, lesser the value of theta. Everybody clear with this? So this will help you understand theta and vega completely. Okay, so keep an eye on this. I'll share this sheet with you as well, don't worry. So if you want it for revision, just take a picture with your mobile. That will help you for your revision today. Okay, and this is a simple graph. Moneyness versus all these values. So if you see, everything is highest for at the money options and it reduces as you go opposite. Your time value except for delta, your time value is highest for at the money. Your vega is highest for at the money. Your theta is highest for at the money. Your gamma is also going to be highest for at the money. All right, everybody clear with this? And this is how the delta one is. This is the call delta and this is the put delta. Clear? So these graphs will help you understand with respect to moneyness, and this is with respect to the other Greeks and moneyness. Again, a simple. All right. So question to you guys. Okay. Where is Vega highest in terms of expiry? Far. Where is Vega highest in terms of moneyness? Perfect. Where is theta highest with respect to expiry? Theta highest with respect to expiry. Theta highest, theta front. Bhavya is right. Vasudev is right. Those who are saying far, you are incorrect. Remember, far out of the money, far month expiry means higher time value. Higher time value means lesser impact. More time to expiry means lesser impact. Front month means lesser time to expiry, but so the value of theta is going to be higher. So front month is going to have the highest value of theta. Far month, as you go further, it is going to reduce. And in terms of moneyness, which has the highest theta value? That's it. Perfect. So everybody's clear with this? I see Bhavya and Vasudev are typing. Let me see if they have any questions. Okay. Done, Nizamuddin. This is for call. This is for put. Now focusing on gamma. Now this is the easiest Greek, and we have already completed what we have done in that dynamic leverage example. Now what is gamma? Gamma anticipates the change of delta given a 1 point change in the underlying asset. So if your underlying moves up, your delta is also going to change, right? Because your call delta ranges from 0 to +1, your put delta ranges from -1 to 0. So as the underlying keeps on moving up and down, your delta value will also keep on moving. And who will change the value of delta? Gamma will change the value of delta by the amount of gamma. Interpretation of gamma. Gamma changes delta as the underlying moves, impacting the percentage of participation in the underlying movement. Gamma creates a dynamic leverage effect by increasing delta when the stock goes in your favor and by reducing the delta when the stock goes against you. So more participation when right, less participation when wrong. Remember this example? Remember this? Yes, more participation when right, lesser participation when wrong. Now gamma changes delta as the underlying moves. Delta of a call, the gamma's effect on the delta of a call is positively correlated to the script price. Gamma's effect on the delta of a put is negatively correlated to the script price. So, and as the price of the underlying rises, the call's delta will increase. Calls have positive deltas ranging from 0 to +1. If the stock drops, delta reduces. Gamma reduces delta towards 0. If the stock rises, gamma increases delta towards +1. Gamma's effect on delta of a put is negatively correlated. As the price of the underlying drops, the put's delta will also reduce. Puts have negative deltas that range from -1 to 0. If the stock rises, gamma increases delta towards 0. If the stock drops, gamma decreases delta towards -1. Remember, -1 is less than 0. Is this clear? Anyways, this does not come into play in practical purposes. Now just go through this example. This is the same as that. Just read this. If you have any doubts, I'll give you 5 minutes. If you have any doubts, I'll answer. Otherwise, this is simple and straightforward. Yes, vega and then theta. Not gamma, the delta will fall slowly. So is gamma clear? क्या वॉलेटिलिटी है देखो, निफ्टी को भी ऊपर लेके गया, निफ्टी बैंक निफ्टी दोनों को. This is the same as what I explained today before lunch in this. In this, it's the same thing. All right. So 10 minutes break, guys, or 15 minutes break, or 10 minutes break. What do you want? 10 minutes. All right. So do not exit the room. Break for 10 minutes. Welcome back, everyone. Can you please confirm if you can hear my voice and see my screen? All right. Any questions in the Greeks? Okay. So now what I'm going to show you is the same thing practically. Okay. Right. Better than that, I'll show you in Options Oracle. So this is Options Oracle. I'll talk about this later on. Right now, just look at what I am trying to show to you. It's so cool that you can predict price movements. Oh God. No, no, no. Nothing like that. So let me take these because I don't have it here for all. 21 Feb, 28 Feb, and 7th March. Okay. Now, if you see here, the Vega values. Do you see the Vega values here? Everyone. So what I've used is I've used 21st Feb, that is tomorrow's expiry, then 28th Feb, that is next week's expiry, and then 7th March, that is the week after that. And if you see, is my Vega increasing as the time is increasing for expiry? I can't zoom. Okay, so the values I'll tell you, it's 1.17, 5.99, and 8.42. Now take a look at the value of theta. Yeah, then you can zoom in ultra. Take the value of theta here. Look at how theta is reducing as expiry is increasing. So now, whatever I have showed you in that rhombus, everything makes sense to you? Yes, 10,700 is at the money option. In Nifty, we generally don't use the middle option strikes like 750, 850, 950. Yes. Greeks are NA for 14 March. Yeah, because they might not have been traded. If they are not traded, you won't get Greeks. Ashish. Let's see. Yes, same thing. No difference. So I'm trying to get the far month expiry also. Yeah, I don't know. I mean, maybe this it's not getting it. The gamma value. Anyways, doesn't matter to us. Vasudev. We don't really use gamma values in our calculations or in under trying to understand what's the risk for our options. All right. Now let's see if I get. Yeah, now I got. So I'm going to take the monthly expiries and not the weekly expiries. 28th March, 25th April. Then I'll go to 27 June, and then I'll go to the December series. Now, similar way compare. So the June and December there is no trade because there is no trade, so there are no values of Vega and the others. But if you see delta for at the money doesn't change; it still remains the same. It's close to 0.5. Vega, if you see, is it increasing as the expiry is increasing? Yes. So basically, if so, what does Vega tell us? Vega gives us what is the new options value going to be if the volatility changes by 1%, isn't it? Okay. Now take a look at the prices of the option here. Okay. So those, if you can't see, please zoom this on Blackboard. That should be possible. Okay. Now if you see what are the premium prices? 128, 264, 343. So as the expiry increases, for the same at the money strike, is my premium more? Correct. What is Nifty's price right now? Okay, so let me put this in an Excel. That will be better and that will give you a clearer understanding. Okay. Nifty current market price is 10735. Okay. And we are talking about Feb expiry, March expiry, and April expiry. Okay. The strike is 10,700 in each cases. Okay. Now let's so expiry, strike, premium 127, 128 to 60. Okay, 128, 264, and 343. All right. Now tell me your intrinsic value and time value. What's the intrinsic value for Feb 10,700 call option? 35. What it is going to be for this? Alright, I'm so sorry. So do you see now that the time value is increasing as the expiry increases? Why? No. How does वेगा और time value क्या संबंध है? मतलब ये क्वेश्चन से वेगा का कोई संबंध नहीं है. Yeah, because you have more time to expiry. The April there is, so can, okay, let's talk about this. Okay, pay attention here. Don't type anything. Just pay attention to what I'm saying. Now let's say we are looking at a surprise, and the surprise is Nifty goes to 11,500. That's the surprise. Okay. Now, what is the probability of this surprise to occur in Feb or March or April? Where is the probability highest that Nifty can go to 11,500? You all smart people. I don't need to teach you options. April, right? Because more the time, more the probability that the surprise can occur. So since there is more the time value is going to be more. Got it? Now delta here is approximately the same. So here it is 0.57, and this is 0.54, this is 0.54. Right? Now let's put our vega and theta value also. 6, 13.27, 17. Yeah, from here. रुको अमित, मैं बोला था ना वो सोच चिंदी है कि बड़ा प्रीमियम में मैं क्यों बाय करूं. That is not how options trading works. The probability of a something occurring. Now if you see this, okay, Amit, pay attention. Oh, forget it, doesn't matter. Now let's say the underlying keeps on moving. Okay, the underlying keeps on moving. Or forget it, let's say the implied volatility changes by 1%. The February series will increase by 6 rupees. The March series will increase by approximately 13 rupees. The April series will increase approximately by 18 rupees. Alright. So let's just do this percentage. This divided by this. The premium value. It's so isn't it that the value, the amount of increase is proportionate with 1% change in implied volatility? All these, are they not going up by nearly 5%? So shouldn't your, so shouldn't, so how does the premium value matter to you? Because if it moves in your favor, it will give you that same amount of money. The proportion remains the same. Now take a look at this. Let's say one day has passed. You will lose 7 rupees from February series. You will lose around 3.5 rupees from March series. And you will lose 2.5 rupees from April series. Yes, Ashish. So let's say one day has passed. Yes, from premium. So let's say one day has passed. So what is going to be your change in, so this divided by this to, now see the percentage change of time passing. Yes, Baba, from premium. So when one day passes, Feb series will lose 5%. March series will lose about 1.3%. And April series will lose less than a percent, that is 0.7%. Now imagine the Nifty is sitting in a demand zone and you bought Feb series and it hovers around that demand zone and doesn't move out. So every passing day, is it going to reduce your front month options premium more than what? So the losses are going to be higher for you if you buy the front month option. So that's the reason when we are buying options, we buy far month. We buy far month options. Why? Because one is the volatility impact will be little higher, plus the theta impact is the least. Yes, Amit. No, forget Ashish. I am not going to talk about hedging here. This hedging is not a topic to be considered here. This is all about options trader, being an options trader. So you understand the importance of rules now? How is these figures came? सुशीला क्या कर रहे थे आप? मार्केट तो बंद हो गया. Are you still in the US? That's why. Maybe you took a nap. Okay. This is coming from options oracle. The values are coming from here. Now you see, you don't have to do any Greek calculations. Everything is automatically coming from this. It's from here. What I calculated, it's simple. I'll send this sheet to you later on, all of you. So this is the Vega value divided by the premium, and this is the theta value divided by the premium. So Bhavya, what I'm trying to explain here is, if you buy the front month, okay. So if you no Rahul, options oracle is not same as IV gauge tool. Okay. So if you buy the front month series and if the stock is not moving, you're going to lose your premium every day by 5%, and this percentage is going to keep on increasing as we approach expiry. So you lose approximately 7 rupees from your premium. Whereas in April K, if you had bought the April one, you are going to lose only 2 rupees 50 paise as compared to 7, but from a quantum of 343. So the percentage is lesser than 1. The loss is less than 1%. Here the loss is 5%, more than 5% per day. So that's the reason when you're buying options, is it in your control? Do you know that today when the stock hits the demand zone, it is going to move out? May or may not, absolutely right. But that's not in our control, right? Unless and until you definitely know. Now just pay attention here. Hey, no Shrikant, nothing of that sort. Now this is what, let's say you bought the 10,700 call option when Nifty hit this demand zone. Now if you see this and you bought the February, 1, 2, 3, 4 days, it's still hovering in that demand zone. But your premium would have reduced. So the premium that was there, so let me show it to you. So now if we go, let's say it came into the demand zone on 15th Feb. So let's see what was the price of the option on 15th Feb. Okay. So the high price was 164 on 15th Feb. And what is the high price today? Approximately less than 25 rupees. So 165 and 145. Yes. And if you see the value of theta for February expiry is approximately 7. 7 into 4 days is how much? You've lost that much approximately. Whatever the balance 4 rupees is could be because of delta or vega. That could have got added by delta or vega. But theta will make sure every day I'm going to reduce you by 7 rupees. Now, when will the impact of theta reduce for this guy? For the 10,700 call option, when will the impact of theta reduce? No, no, not far month. That far month I know. In the current month itself, when it becomes in the money, absolutely correct. When no, it is at the money right now, when it becomes in the money, Anil, and it has to become deeper in the money before the expiry for the impact to reduce. That means before 28th Feb, before 28th Feb, Nifty should probably go to 10,900 or 11,000. That's when 10,700 will have lesser impact of theta on it because it has become in the money. Correct, Prem? Yeah, then only delta will pay you. Direction will pay you. All right. Correct, Sony. Correct, Sony. Because your time value component has to reduce. So what will remain with you is only the intrinsic value. How to go to historical data? Just click on any script, any strike, the price. Click on the price, and then here is where you have historical data. So was today a little bit overwhelming? Means why increase? Oh, that is nothing. That is people have taken new contract, open new contracts. Nothing like that, Prem Sinha. That is all dependent on supply demand. Yeah, it's slightly in the money, not deep in the money, Kapil. No, simple, right? You take this 10,000. Let me show you this. Now, if you take a look at this, the 10,500 call option, okay, on 14th Feb or 15th Feb, it was 309 rupees, and now it has become 286. Yes, Ramesh Babu. Now, why is the premium so high here? नहीं गलत. आज 280 रुपया है और 14 तारीख को 339 था. 14 तारीख को प्राइस क्या था? 14 नहीं, लेट्स से दिस. 15 February Nifty was trading at a low price of 10,630 odd level, 30 odd, right? So that time 10,500 was slightly in the money, correct? Now has it become a little bit more deeper in the money today? So which means there is more intrinsic value and less time value. So lesser impact of theta and lesser impact of vega. So the 10,500 will have 10,742. That means 242. Sorry, 10,7. 235 is the intrinsic value and 45 is the time value today. But on 14th or 15th, when Nifty's price was 10,630, that time it was trading at 310 rupees, out of which only 130 was the intrinsic value and the remainder, which is approximately 190, 180, 190 was time value. Now see how time value has reduced in 4 days, but at the same time, since the market has moved up, your delta has paid you. So your impact of volatility and theta is reduced, and delta is just paying you. As the stock goes up, the delta keeps on paying you. Makes sense, guys? So I'm just waiting. But March there is more time, right, रमेश जी? मार्च को बहुत टाइम है, तो डीके स्लो होगा. डीके तो जरूर होगा, लेकिन मार्च 28 को जीरो होगा. वो अभी नहीं जीरो होगा. Delta will increase. The March series will also become in the money. All right. So now what I want today, I'm going to close the room here now. What I want you guys to do is simply go through these Greeks today, take the quiz, and tomorrow we'll start with our application. So first I'm going to talk about the open interest and everything, and then we will start. So tomorrow I intend to finish all the explanation of strategies, and Thursday first half we'll do all the RR calculations, and the second half I'll give you examples to do if everything goes on time. Nifty view public demand. All right. All right. Take a look at monthly. Yeah, you can call it as a pro gap, Divya. Okay. Monthly is again sideways. Weekly came to this lowest point, that is the pivot. No problem, Arun. To the pivot it came. From there it is again rising, and on the daily it's like a drop base rally. Now if we have a follow through tomorrow, we could easily move up a little bit. At least 10,900 could be the next target for Nifty. All right. So it's pretty. If you see this, let me show it to you. See this, right? Strong fall coming, and then suddenly it started going sideways. This was the first thing that showed that probably this is where the bottom is going to be formed. So you still were not allowed to go long. Now this is like a drop base and a rally. Now you should think of going long. So like probably there'll be some 15-minute demand zone within this entire area where you can think of going long, aggressively long, because what the location is supporting us. Look at that. This prices moved out, took out supply. So and then there is all this is not great supply. Prices could easily move. Now the only thing tomorrow is a weekly expiry of Nifty Bank Nifty. So depending on where option writers want, they might want to do it at 10,800 or 10,700. We don't know. But if we move tomorrow to 10,800, is there any supply here for us? No. So that's why we could move into these areas of supply. So that's going to be your target supply area. All right. Looks like the turn has happened. The shorter term trend is going to shift to the upside. Yeah. So avoid HIT shorts. Even DIT. DIT shorts are only going to be enabled when we move close to the daily supply. Any shorts is only when you move to the extreme. No, even I had that trigger coming in for Wipro. 372 to 373 area, right? Yeah. So make it a confirmation trade. All right. All right, guys. So this completes all the theory part. Now little bit theory is remaining, which is tomorrow morning I'll do it before breakfast, and then after breakfast we'll start with the strategies. So please go through these Greeks and attempt the quiz. All right. So don't worry, we are on track as of now. Trade well, trade safe. Please exit the room.